Hello everyone, welcome to my YouTube channel. I'm going to be doing a chat breakdown on multiple pairs today. So stay focused and stay active. Stick from the beginning of the video to the end. All the analysis are going to be based on CRT and Theta. So focus and stick to the analysis. I'm going to start all the analysis from the weekly time frame, and then I'm going to stop most of the analysis on the 4 hour time frame, so that you can be able to have a logical framework in which you can position yourself on the upcoming week, and you can be able to generate possible trading opportunities with the trading style in which I'm going to be using in breaking down these videos. Okay, looking at Euro USD, right? On the weekly time frame, you can clearly see Euro USD is pretty much on a range. Was There is it on the left hand side, and as soon as you come to the right hand side, first sweep the low of the range with a bearish down close candle, but range for a little bit. Then as soon as price expands above the down close candle, price now makes as expansion, an expansion profile above the candle, the down close candle that should be low of the range. So price now, after making an expansion profile, we know that possible to you have expect two possible profiles. That is the range profile, the retracement profile. Okay, price now made a pullback. You can see a retracement profile uh towards this down close candle, right? That's pretty much what we are seeing. And also price also made a retracement towards this weekly order block as well. And then price also make a reaction towards the weekly fair value gap as well. Okay, based on this weekly range, we can clearly understand that price is currently sweeping the low of the range, and based on our rules on range trading, when price takes the low of the range, then our long-term drawn liquidity should expect it to be above, to be the opposing end of the range, that is the range high. Okay. Okay, looking at the bearish, looking at CLT and combining CLT with actual market statistics, we can clearly see that price actually is actually rejecting highs. That is the weekly rejection of this previous week high, and when we have that, we possibly call that a CRT, because the rejection is being taken place on a weekly key level, which is a weekly fair value gap. So based on this, we may expect price to have a short-term draw on liquidity towards this candle range high, that previous week candle range high. That is, if you expect a retracement, you expect our short-term draw on liquidity should be at the 50% of the previous week candle range, and then the opposing end of the range as our draw on liquidity. So I'm going to now refine my analysis on the daily time frame, so that you guys can furthermore understand what price is currently doing on the weekly time frame. Okay, on the daily time frame, we can clearly look at the left hand side. Price was in a downtrend, doing lower lows, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then as soon as price makes a market structure shift, that is break above the swing low, the swing high, that precedes the breakout, we can currently call that our market structure shift or change of character. I hope you guys are active, guys. Okay, let me furthermore refine my analysis, my key levels on the 1 day time frame. Okay, I got this I got this bullish order block, and I also got this bearish fair value gap ASAP, and I also got this bearish fair value gap. Okay, looking at these fair value gaps, looking at these bullish key levels, right, we should actually understand that price took both the swing low and the swing high of this current range, right? And when price takes a swing low and take the swing high and then creates an expansion swing, then we are actually having a bullion dealing range. And for that reason, we have to divide our chart into two, that is our premium region and our discount region. And when price is at our premium region, we should expect a retracement lower to our discount region for a bullish dealing range. Sorry. Okay, based on what we are currently analyzing, you can clearly see that price is making a bearish internal structure, right? Price is making a bearish internal structure because once price actually meet an expansion swing, price now broke below the swing low. That is, you can call it a break of structure. You can call it a break of structure, guys. That is our break of structure. Sorry. And then let's further define our weekly fair value gap, uh, which is this daily fair value gap. We're currently at here. Okay, looking at what price is currently doing here, we should actually understand something based on CRT and key levels. Price actually tapped into this daily fair value gap and gave us a bearish CRT. That is, candle number one is bullish, candle number two is bullish, and possible candle number three which we expect it to be bearish. So applying the open high low close, we can possibly look for sales as ASAP, as soon as possible. As soon as the week opens, you can possibly look for sales. Okay, we can clearly understand something. We got a bearish CRT, right? We got a bearish CRT, and then we also got a bearish CRT on the 1 day time frame. Okay, you guys know trading CRT without a good understanding of key levels, right? You are gonna be you are gonna be losing so much that you might even stop trading. I hope you guys are understanding something. So without understanding key levels, you are gonna be losing so much on trading CRT. So based on this, our short-term drawn liquidity is 50% of this daily CRT, and our long-term drawn liquidity is the opposing end of this daily CRT, this candle range, where our first candle is our accumulation, second candle manipulation, third candle then proper distribution. So based on this, we are actually bearish on Euro USD. Our short term trend, right, should be bearish. Okay, what we should do is you should position yourself on the 4 hour time frame and probably trade, look for a valid 4 hour candle and trade right up to 50% and also the opposing end of the range. Okay, with that said, you can also see that looking at this particular area as well, we are just in a range. So we are in a range, and we also got this fair value gap price tap into, so we should expect maybe price might expand lower, maybe. So bias wise, I am bearish on EU. Short term, long term wise, I am bullish on EU based on the fact that we are currently going to be targeting this range high at 1.20765. Okay, I'm gonna be done with EU for now. I'm gonna analyze USJPY. So you guys should be active, guys. Be active. I don't usually trade USJPY, but I'll do my best to analyze it as as easy as possible, so as you guys can understand the same logic in which I'm analyzing EU, that the same logic can be applied to any other pair. Okay, looking at USDJPY, right? uh, I'm looking at the left hand side. Okay, looking at the left hand side, I can clearly see as Usdjpy breaks this swing high, and that is, you can call that a break of structure, right? Okay, once price breaks this swing high and sorry, once price breaks this swing high, right? Price makes a higher high, right? Okay. What I can understand in this is that USDJPY broke this swing high, and then USDJPY also took the low of this swing high. This swing high. So that means we got a bullish daily range because price broke the high and also broke the low, and then price created an expansion swing. When price does that, we call that a daily range. So we can just put our daily range. Our daily range is where we are going to be focusing on. And when we have a daily range, we need to understand that when especially for this analysis, we got a bullish daily range, and when we have a bullish daily range, we need to understand that um key levels that are at premium are not too solid, but the ones that are at discount are more solid. Okay, looking at this, we bought our fair value gap here at discount, and then we also got our weekly CRT. Okay, looking at this weekly CRT, we got a weekly CRT in such a way that price actually tap into the weekly key level, and then you guys know that when price tap into the weekly CRT, the first level target is 50% and the second target is the opposing end of the range. Okay, my long-term drawn liquidity is this range high, and then my first drawn liquidity is 50% of this range. Okay, based on this, I already know that I have to focus on buys on the weekly time frame, right? Okay, on the daily time frame, let me try to refine what I'm actually analyzing. On the daily time frame, what I actually got is I still got buys. Why? Because I got this order blocks price sweep liquidity before the previous candle. When price takes liquidity, so an order block is a candle that generates liquidity, right? Like this candle swept liquidity, and then we call that candle a key level, right? And then what you need to understand here is that once the market makes a pullback on the order block and also give us a SCRT, then we got a very strong confluence which we can actually focus on. Based on that, this is a CRT, and the CRT is on a daily key level. Thank you for focusing. Okay, looking at the daily time frame and also the logic behind the weekly time frame, we got to understand something here. We got to understand that the fact that price is taking the previous swing low of this previous candle, we are actually using the if then principle, right? Our bias, that is our short-term drawn liquidity, is gonna be 50% of this bearish candle and the opposing end of this candle, based on CRT and total soup. Based on CRT and total soup. So what we should expect is we should expect three possible scenarios within this bearish CRT. Sorry, within this bullish CRT, because we are actually focusing on buys, right? Okay, we should expect a model number one below the range, and then we expect an OTE, and then we expect an OTE, and then a kiss of death. So you just position yourself on the 4-hour time frame and then trade the weekly, the daily CRT in the direction of the weekly candle. So okay, I don't like making the videos too long, so I will end the video here. This analysis will just be focused on USD, Euro USD, and USDJPY. So I'm going to stop here and end the video. I love you guys. You guys should keep on watching the videos. Okay, if you enjoyed the video, you can subscribe so that you should be the first to watch the video when I'm dropping it. And also, you can actually comment, like, and share the videos. Peace out.